Welcome to the webinar, everybody. As most of you probably know, my name is Walter Peters, and we're going to talk about 3 naked reversals today. Some of you I know quite well because I've seen you many of our webinars. Some of you are new, and I would like to welcome you here. I wrote the book called Naked Forex, and that's what we're going to talk about today. Naked Forex is just trading without indicators. That's what this is all about. So it's price action trading. Essentially what happens with naked trades is I and all the other naked traders basically do the same thing, which is we wait for the market to get to a significant spot on the chart. Those spots are marked on my chart here by these lines. It just means it's a support and resistance level. Some of them are only support and some of them are only resistance because they're the extreme highs, but most of them are both. So for example, you have here resistance, 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 and then when it finally busted through, it became support right here, right? And support again here, right? So today what we're going to talk about are the 3 naked reversal trades. And at the end of the session, I'd love to look at your charts from a naked perspective. If you're in any trades or thinking about getting in any trades or things like that, and I can show you my trades that I'm in now. I've been in a few trades now for a few weeks, and they're all finally starting to cash out. So I'll show you those. But for right now, I want to just, show you the 3 trades that I had lined up for you tonight. So I'm ready to go. Let's roll. This is going to be fun. So basically, actually, I've got the pound on here. Does anyone have a pair that you would like to look at? I don't want to cherry pick these. The reason why I ask you to give me your chart that you want to see is because I don't want to cherry pick examples. I want to show you that these sorts of things happen in all markets and all time frames. And so I don't really want to just, I don't want to stack the deck in my favor. I'm happy to use your charts. So we have the Euro Aussie, says Joe. Okay, so we've got 3. So the first one we'll use the Euro Aussie. The second one, Trend Trader says the CAD Swiss. So we'll use that one for the second trade system, or the trades, reversal setup. And then the next person to pop one through, we'll use yours for the third one. So the first trade, so Euro Aussie is right here. So the first, thank you, Joe, and thank you, Trend Trader. And anyone else, if you want to pop it through, the next person to pop one through will use yours as well, your chart as well. Okay, so yen says Alexandru. Okay, we'll use the yen. Thanks. All right, so the Euro Aussie. Okay, so let me show you what the first one I want to show you is. Okay, let's see here. Maybe we'll go to 4 hour. Probably get more trades that way. Okay, this is actually awesome. All right, cool. Great, great, great example. All right. All right, the first trade I'm going to show you is not in the book that I wrote. It's called the bend trade, okay? And a bend trade is a trade that you actually don't even need candlesticks for. Well, I lie. Actually, you need candlesticks to set your price, your entry price, but you don't need candlesticks to see it. So we just had a bend trade, in fact, on the Euro Aussie 4 hour chart. So first of all, let me establish that this area right here is a support level right here where the market came down and bounced quite strongly and went up. Okay. So when the market broke through here, I looked to this area as a resistance level, right? As a spot for possible resistance. And that's exactly what happened here. So where it bounced here as support, I would expect it when it broke through to come back up and touch it and then go. It's a very, very common setup. In fact, you see the reverse as well. When the market breaks through resistance, they'll often go higher, then come back down, bounce, find support, and then keep going even higher. So this is a really common way to get into a trade. And basically, this is where the bend trade occurred. So let me show you what I mean by bend trade, what I'm talking about. Whoa. Show you kind of what it's all about. All right. So All right, so here is, let me sort of make this bigger. Huh. Okay, so the market, so first of all, for a bend trade, I need to know what? I need to know that this is happening on a zone, on a support and resistance zone. So that's the first rule. Must occur on support and resistance zone. Okay, that's number one. That's what we have here. We have a support and resistance zone. Number two, the line chart is where you see the bend. Okay, it's got to be a really sharp bend on the line chart. So you don't really need to look at the candlesticks until you're ready to enter the trade. So what I use is a line chart. It's a steep or drastic sharp bend on the line chart. Most people don't even look at the line chart. The line chart is magic. I love it. Let me show you right here. So what happens is the market falls through the support level here, comes back up and touches it, and then it goes away quickly from that area. And so that's why, you don't, like a bend trade isn't going to look like this, for example. On your line chart, you won't see a bend trade that looks like this. See how this one is sort of like a shallow fall like that and sort of double tops? That wouldn't make a good bend trade. Good bend trades are really sharp. Like this is pretty sharp, that's sharp. You don't want to have one where the market's not really ready to go. Like this would be one that you would stay away from right here. See how it's kind of flat right there? That's not a good bend. The sharper the better, okay? So it's got to be really sharp. Hopefully that makes sense. If there's any questions, let me know. But that's definitely what I want to see is that sharp move. So the way that you're going to get that sharp move is when you move back to the candlesticks, you'll see a candle like this one. See how this candle right here is a really big red candle, and it's closed below the low of the previous candle. So the previous candle basically closed right on the zone, and then the next candle went so far down, the line made a quick bend. And that is really what we're looking for here. Okay, does that make sense? So you wait for the market to get to a significant support and resistance zone. Then when the market prints a really bearish or bullish candle, you will get either, if it's a bearish candle, you'll get obviously a nice bend on resistance. And if it's a nice bullish candle, then you find a really nice sharp bend on support. Now, this is how I enter it. Basically, what I do is I enter, so let me go back to, now this is when I go to the candlesticks, and I say, okay, well, there's my, there's my trigger candle. That's my big red candle here that's giving me this sharp bend. So now what I need to do is I need to place my order below that candle. So it doesn't get triggered unless the market trades below this candle. This candle low is what? It's 41.80. You can see that right down here in this box right here. So 41.80 is my low. That means I go ahead and put my order 5 pips below. Order 5 pips from trigger candle. Okay? My order is 5 pips from the trigger candle, just like that. And there it is. And so, basically it's falling like this, like that off the, so the sell order goes right here, guys. 5 pips below, so it's right in this area right here, right there. Whoops, I made it too big. That's the sell order right there. Now, what about targets? Well, there's a couple of things that you can do here. You can use like on this one, obviously using some sort of trailing exit would have been ideal because it's so trendy, But you can also use the next support and resistance level, which on this chart, remember this is a 4-hour chart or a daily chart that I'm using here. It looks like there's a level right here where you see, well, I'll zoom in so you can see it better because I know sometimes it's hard to see on here. It's right here, guys. See, resistance, support, support, and then support right here. We're kind of on one right now, actually. This would be a really good place for target 1. And then target 2 would be a little bit further, all the way down here at 38.60. So target 1 would be around 41.05, and target 2 would be around 38.60 or 38.70, really. So we're right on top of target 1, essentially. I know I use the daily zones because those are going to be the significant levels on the 4-hour chart. So if I can find a really good daily support and resistance level, that means that the 4-hour will definitely have to deal with that level, you know? And I generally do that across the board. Like if I'm looking at the weekly chart, maybe the monthly chart's going to show me where the levels are. If I'm on the daily, I like to use the weekly chart to show me where the levels are and so forth. So yeah, so that's essentially the bend trade in a nutshell. You wait for the market to approach a zone. It's got to print a steep bend, which means you're going to have a really strong candle. So really what you're hanging your hat on is this. It prints a really strong bullish or bearish candle, and the order is 5 pips away. Now, stop. Talk about the stop, right? Of course. Stop goes, no, I don't always use, that's a great question, Trend Trader. Trend Trader says, do you always use a trade where the market breaks an area and then comes back and retouches it? Not necessarily. That in itself is, I believe, a really good setup, and I enjoy taking those trades, Trend Trader, but the bend trade doesn't have to be that. Like, for example, I'll show you one actually that we took recently. This is a live trade, and it's on the weekly. It was on the weekly Kiwi right here. Let me show you this one. Okay, so this is what happened here. The market, here, I'll show you. It was right here, guys. And I'm actually, how low does it go? Yeah, it still hasn't hit my target. So I've got a target here. Well, actually, I can show you the chart here. Let me go back to my other chart. Well, my charts got messed up, and so I have to really sort of order them and everything. But I'll show you the exact levels and everything on this trade. I'm not sure if you follow my trades, Trend Trader, but this was a weekly chart trade on the Kiwi, and it actually was a bend trade, and it was not a retouch. So let me show you. Where is it? Oh man, it's crazy. Daily. It's the New Zealand dollar. See, they're all messed up, and I can't. I usually have them in a nice order, and I don't. Oh, that's New Zealand yen. No wonder that doesn't look right. It's the New Zealand weekly. I can't find it. Oh, there it is. There it is. Okay. All right. So here is the level that it approached right here. This 88 level. Okay. Now you can see all these numbers on here and all that. I'll explain everything. So what I said was, I was going to sell at 86.43. So essentially, this is what I saw. I saw this. Okay. You can think about it. When the weekly chart closed, this is what the line looked like. Okay, that's a steep bend. Now, I had already identified this as a really strong area of resistance, but this is not a breakout and retouch type scenario. Not all bend trades are like that. A lot of bend trades are just like this. So what happened was, if you notice, this candle, it's not an engulfing candle. It's not a big shadow, which is a special case of the engulfing. It's not really anything. All it really is just a really strong bullish or bearish candle, and I wanted a reason to take a trade because I thought that the market had exhausted itself here, given that it printed this big red candle. And that's really what a bend trade's all about. It enables you to take a trade with rules, so long as it fits in that box. And so whenever you see the market make a really big candle, you can think to yourself, well, it's definitely going to go that way. And that's kind of what the Ben trade capitalizes on. So that was so you can see, like, what's the low of this candle. Now, when it happened, I actually said I really wish that the market closed lower, because it did kind of come back up, but that's pretty common on Fridays, that the market will kind of retrace a bit. So I wasn't that concerned about it. But I did say, when I took it, I did say, you know what, it would have been nicer had it done a little bit of a lower close. But anyway, the low on this was 86.48. Okay, you see how the low says 86.48, and I sold at 43, right? I think I actually got in at 42 for some reason. I'm not really sure why, but I got in at 42, and the original stop loss was up here, above this candle right here, above the red candle. So it was at 88.25 or something like that. The high was at 88.22. So now the stop has actually been moved to 86.37, or plus 5 pips. And this is because it hit target 1 at 85.55, which is why there's a little thumbs up. And then it hit target 2, 100 pips lower, at 84.55. And we've come really close to tagging 83, which is target 3, but we haven't. It's gone to 83.10, but it has not reached my target just yet. Now, some of you might be getting nervous because you say, wow, it went all the way down to 83.10 and didn't get to your 83 level, and it's all the way up now 65 higher at 83.75. I don't really worry with that. I don't care if it doesn't take the target out until next week. It's a weekly trade, and they're going to bounce around a bit, and weekly charts have a wider range. So as long as my stop's up here at plus 5 pips, I'm happy. Okay, so that actually is an example of a Ben trade that I just recently took. When I say recently, I mean, it was almost 2 months ago now, but basically it was right. It was this candle that did it. So hopefully that makes sense. Yeah, cool. Okay, cool. I'm glad you like it. Okay, so now, so let's go back to the other charts here where I have my notes. So essentially, that's what a Ben allows you to do. It allows you to take a trade when you go, when you look at the markets and you say, I know what the market's going to do. It's so obvious that the market's going to, bounce here because it printed that big candle, And a lot of times, as price action traders, we do that. We look at the market and we go, oh, well, it's just obvious, it's so clear what's going to happen. It doesn't always work out, of course, but that is sort of what it looks like. So there's the rules, guys. Must occur on the zone, steep bend on the line chart, which means you're going to get a really strong close on a big candle. It's got to be, that close has got to move far away, otherwise you won't get that sharp line. And then the order is 5 pips from the trigger candle. And the stop, I'll put this on here as well for you. Stop is on the other side of the trigger candle. Okay? And that is the Ben trade. Obviously, you could use a trailing exit on this. You could also just use the next zone or the next 2 zones. What I like to do is go for the first zone, move my stop to break even, and then go for the next zone and possibly even the next zone, like on that Kiwi trade, right? So there you go. All right, so that's the Ben trade, and that's how I use the line chart to see movement in the market and reversals in the market. The key here to remember is number 2. That's really important. I can't stress that enough. It should be a strong, sharp turn. Sharp is the most important thing. Let's move to our second example here, which is the CAD Swiss, and we're going to look for, where is the CAD Swiss here? All right. CAD Swiss. There it is. Let's go to the 4-hour CAD Swiss. I see. All right. CAD Swiss is very, very messy. Sometimes I notice that the CAD pairs tend to be messy. What I'm trying to find here is an example of the trade I want to show you. Okay. That's probably not a very good one. Let's find a better one. CAD Swiss. What I've noticed is that there we go. That's a beauty right there. Okay. All right, here we go. So what I want to do here is, now that I have this chart up here, it's a 4-hour chart, I'm going to draw my zones in, which I'll have, the highest and the lowest of the support and the resistance, and then everything in between, which is going to look like this area. And then it looks like probably here. Now you might be looking at this going, wait a minute, that doesn't look right. So we'll use the line chart just to line it up like that. All this resistance, or sorry, support, resistance, support, resistance, support, so forth. There you go. We've also got one right here. Look at this. And there it is. Okay, so here's what's going on with this one. This is the trade we're going to look at. Now, what I want to do is line it up like this. All right. So what we're looking at here is the let me just see here. Yeah, okay. All right, so what we're looking here is a kangaroo tail. And what you have here is a textbook kangaroo tail that has everything that you want in a kangaroo tail. Number one, okay, definition of a kangaroo tail. So if you don't know what I'm talking about when I say kangaroo tail, kangaroo tail has the open and the close in the top third of the candle. This is for a bullish one. For a bearish candle, you would reverse everything I'm going to say. For a bullish kangaroo tail, the open and the close in the top third of the candle. The open and the close are within the previous candle's range, which is certainly the case here. The previous candle here, you can see, has a high at 92.92 and a low at 92.57. Obviously, the open and the close are within that range of the previous candle. Number three, the next candle trades higher than the high of the kangaroo tail. That's critical because it needs to trigger that buy order. If it doesn't trigger on the next candle, often many naked traders will just scrap the trade and say forget it. Some will actually wait a little bit longer, and I occasionally do, but the real rules for a kangaroo tail are that you wait one candle for it to trigger, okay? Now, what about targets? Well, targets are the zones. So you've got a target right here, you got a target right here, and even if you want, you could have a further target up here where this is another kangaroo tail right here, actually, you can see, and where the bounce was right here. So that's another target. So stop loss goes down below the kangaroo tail, and you can see this one, it took two candles to sort of retrace, and then it was off. It hit target one, bounced, came back down, and would have been stopped out at break even before running up to target 2 and target 3. Okay, I generally will move my stop to break even once it hits target 1. So this would have been good for only target 1. So let me explain again the rules. One is that the kangaroo tail prints on its own, right? So these are the kangaroo tail rules. 2, the open and the close in the top third Boom, boom, boom. Right. You all know that. How many of you have never heard of this before? How many of you have never heard of the kangaroo tail? Or have most of the people here are familiar with this trade? Because I just don't want to, like, I know some people will come here a lot and some people are new. And I don't want to be boring. Open and close inside previous candle range. Like that. Same as pin bar. I guess. I don't know. I've never really heard anyone say that a pin bar has the open and the close in the top third, the open and close inside the previous candle range. The majority of the candle has space or room to the left, and that the next candle has to trigger it. I haven't heard people do that, but maybe they do. Maybe they do. I would say that it looks like a pin bar often, but not all pin bars would be kangaroo tails because a lot of people don't trade the pin bars with kangaroo tail rules, right? A lot of people don't um, wait only one candle and so forth. Stop loss obviously goes on the bottom of the tail. Stop loss on other side of candle. On the other side of the kangaroo tail. The order is 5 pips above the high for a bullish one. So you wait. So number 5 is you wait one candle for it to trigger, right? Five pips away, right? You wait one candle for it to trigger 5 pips away. And of course, you can use any sort of trailing exit. You can attach that to this, or you can go for zones. But that is, in essence, your kangaroo tail. Got it? Things to watch out. There was another one. Let me show you. There was another one that I was going to show you, but there were some problems with it. What's wrong with this kangaroo tail? Based on what I've just told you, why isn't that a kangaroo tail? Right there. Any ideas why that one would not qualify as a kangaroo tail? Prints outside the previous candle. Ding, ding, ding. Trend trader got it. Yep. Trend trader got it. Yep. There is some space. That's an interesting point. Some people are saying that there isn't enough space. There is some space, but you're right. Like these candles right here are in the way. The very best kangaroo tails have a lot of space, and you can pull them fully across the chart like that, like the one I showed you. But this one does have a little bit of space, but you're right. Open and close are not inside the previous candle. Yes. The side's got it. Yeah. Yeah. I'm with you on that one, the side. So basically, you know what I mean? Like, if you zoom in, you can see. I'll show you. See where this close is right here, guys? The close is at 96.45, and the low of the previous candle is 96.48. So it missed it by 3 pips. And that's to say nothing about whether or not you think this is a zone. We'll just assume that you say this is a zone, right? So that's another thing. What about this one? What's wrong with this one right here? This is like kangaroo tail school. What's wrong with that one? Yeah, and Alexander says it didn't break the level. Yeah. Yeah, so for a bearish kangaroo tail, we'd want the open to close to be in the bottom third. I'm not sure. It could be. It's really close. No. Oh, yes. Wait, hold on. Let me see if I got this right. Ooh. Ooh. It looks like the close is right on the 33% level. See, I've got my fib here, and it's got the 33% level. Let me delete the other one for you. So I'll take out the 10%, 61.8, 38, the 50. Look at that. It looks like to me that the the 33% level and the close of the Kangaroo Tail are the same. But beyond that, let's just say that it's on a zone. Let's not even think about, whether it's on a zone or not. Beyond that, it's got very little space because look, these candles are in the way right here. So if you pull if you pull the Kangaroo Tail to the left, what you notice is it's got very little space. So it just goes boom and runs into these candles right there. The reason why you want to use candles with space is because if you're trading a reversal, you want to know that the market hasn't been there in a long time, because that's where the market reverses from, places that it hasn't been in a long, long time. Okay, so no questions. Is this all good, guys? Kangaroo Tail's all sweet? So you're good on those? Let's move to our third one, yeah? All right, so our third and final trade setup for tonight is the old moolah and whammy. And we're going to go to the yen, I believe, because someone had mentioned that we wanted to, who was it? Is that Joe? No, Alexandru. Okay, so yen's really, let's see here. Let's go to the 1 hour just to mix it up a bit. Yeah? And we'll show you. So the first thing is the market's got to be traveling, in a direction for a while. And that's how we know that we're ready for a moolah or a whammy trade. Moolah is the bearish setup and whammies are the bullish. So long as the market's been moving in a direction for a while, that's good. Let's go back until we see the market going in one direction, okay? I want to see some sort of trending stuff happening here. Actually, this is a really good one, right? I'll find a better one. This is a good one right here. This is a really good one. Okay, let's use this one. Okay, so let me focus in on June 13th. All right, right here. You know what? This would almost make a better 4-hour trade. Let's look at the 4-hour actually, because there's just too much noise. Whoa. June. Yeah. Okay. I don't want to confuse you, so I'm not going to do that. That one's too confusing. Let's use this one. Let's use this one right here. Oh, geez. This one's a little bit aggressive, but that's okay. All right. So let's say that we've established this level of the zone, so we have touches here, here, and here. Okay. Remember, we're on the 4-hour chart, and I actually was working off of a daily chart. That's why these zones are drawn in, from a daily and a weekly perspective. So this is what happens. The market's been moving down for some time. You can see it's been moving down since March, early March, and here we are in early April. It's going roughly down, shallow moves down for the last month. And then it reaches this level here at 92.80. And guess what it does? It prints a really nice low wick, and then it snaps back up, and then it comes back down, and it prints another low right here, an almost equal low. But the reason why this is a whammy trade is because the second low is not as low as the first. So you've made a sort of W. If you look at the line chart, it looks like a sort of a W formation, but the second touch is not as low, and that's the critical thing here. And when I say the second touch is not as low, I'm talking about the wicks, not the close, the wicks, okay? So the second wick is not as low as the first wick. That is, by definition, a whammy setup. So let me write the rules here for a whammy. And, of course, you can use the same exact rules in reverse for bearish setups, and those are moolahs. So this is a whammy. The whammy rules. Very simple way. Most people know how to trade double bottoms and double tops, but they don't specifically filter out the worst setups. And often the worst setups don't have these characteristics I'm going to share with you right now. So number one, almost equal lows. Again, if you were going to look at a moolah, it would be almost equal highs, right? You just reverse the rules here. So almost equal lows, but the second, and obviously they're touching a zone, right? But the second touch is higher than the first. Second low higher than the first, right? And that's critical. And then, and this is where this trade gets really funky. The stop loss is below the first low. Okay, it's always going to be right here. Let me show you. The stop goes right here, guys. Boom, like that. That's my stop. Now, why? Thinking about this, why would I put my stop below the first low? The reason why is because what I'm saying is that the market's going to start making higher lows now, and this was the first higher low, right? That's the logic of the whammy trade, is that the market was making lower lows and going lower and lower, and then it's decided to start making higher lows, and now it's going to go higher and higher. So that's kind of what it's a double bottom, but it's a double bottom with very specific clues. Okay, so this I'll put that on there as well. Stop below the first low. So 5 pips below the first low. And then number 5 is the buy order goes above, 5 pips above the trigger candle, which is a bullish candle in this case. Now, I'm sure you can pick it out. In this example, it's a little bit extreme, but buy order so we have a bullish candle that triggers the trade, right? And that's it right there. Okay? All right, so in this case, the bullish candle is right here. So the buy order goes right here, 5 pips above that high, right there. It's triggered here, and then we have clear targets here and there and even there. But this is one of those examples where the market just went. It's kind of like my New Zealand dollar trade that I'm in now. You know, the market just took off and didn't really retrace. But sometimes what will happen is they'll hit target 1 and they'll come back and stop you out at break even. Like the last Kangaroo Tail. That's much more common, actually, than this result. But this is what you get. So you get this really bullish candle. Now, it doesn't have to be, like, what is a bullish candle? The question becomes, what is a bullish candle? Well, I'll show you what probably the easiest way to figure out what a bullish candle is to know what is not a bullish candle. So this right here does not qualify as a bullish candle. See that little candle right there where it's got a lot of wick and not a lot of body? That right there is not a bullish candle, right? A bullish candle looks something like this one right here. Big body, nice close. The stronger the close, the better. A candle like this one would qualify as a bullish candle. A candle like this one would qualify. Even sort of a like a Kangaroo Tail style bullish candle like this one would qualify as a bullish candle. Anything like that would tell you that, okay, you know, the market's getting ready to go. It's giving me, you know, the clue that it wants to bounce and go higher. And so in this case, obviously, this is the bullish candle. I wouldn't have gone with this one simply because, you know, it's kind of still on the touch. You know what I mean? So it's kind of it's the first bullish candle I see on my whammy trade after the second touch has been established. So I wouldn't have gone with that one. There's no way I would go with that one because I still want to make sure that the market's ready to go up. Because if you think about it, if you see the market here at this stage, Look at the line chart. Like it's not really clear. Like it looks like it could be a double bottom, but look what happened. It came back down for another touch, and that happens more often than not. So it isn't really until this close that I'm thinking, okay, now it's ready to go. So 1103 and 1403 bearish landing. Let's see. Is that on the same year, Alexander? Oh, you're talking about March. March. Sorry, I'm thinking of the old. I'm used to reading it the other way. So you're saying March 11th and March 14th, yeah? I'm used to reading day and month instead of month and day. Yeah. Yes. The only thing. So I think you're looking at, just so everyone knows, I think you're looking at this and this, right? Maybe. Here's the problem with this. Is let's just assume that we're on a zone. Okay. I know I've got this zone drawn in as a daily. So let's just assume that I'm more precise and that it goes right here. The big deal here is going to be the number of candles in between. And you've got only 11 candles in between, so yeah, that's okay. Ideally, the touches happen, fewer than 20 candles apart. The only other thing I would say about this one is look at this. This would scare me away. The fact that this touch is the third touch, really, 1, 2, 3, that would probably be enough for me to not take the trade. Because I know that the third touch is much more likely to break through than the second touch. So I suspect that I would let this one go. Technically, you're right, and you could sell it off of this red candle right here. But I like them to look much more like the double bottom. Let's see if I can find a bearish one for you guys while we're here. Or if you have any charts that you would like to look at, just throw them in. And like any live charts you like to look at. See, this to me is a much better setup here. This one right here. I don't know if it's 20 candles, though. It could be. Ooh, it looks like it's 21. Depending on if you count this one, that one touches, so that's probably too many candles. So yeah, it doesn't count either. And then I also stay away from these where, see how the market didn't really go away from the bottom? So I would also stay away from these where it touches, it goes up, and it touches again. Those don't qualify for me. They need to go up higher. So I'm actually glad that we're looking at something because there's a few things here that to me are, it really is a double top or a double bottom. That's what I'm looking at here. Special case double top and double bottom. Yeah. All right. So which charts would you guys like to see right now? I'll show you. I'll move to my other charts and I'll show you my trades. And you can show me yours if you want, or just tell me what you're looking at or what you're in or whatever. Euro yen. Okay, cool. We'll see if we can get my charts to load here. I've got way too many charts on here. All right, Euro yen, I believe, on my funky charts is over here. Ooh, okay. So we talked about this one. A lot of people were wondering about this candle, and I said it may only go up to this level here and then fall away, and it looks like it's doing that. It's coming back down. I would probably either move to a lower time frame, or if I were trading the Euro Yen daily, I would wait for it to break out of this box that it's in right now. That's what I would do. Because to me, we're in this box. We've got 2 touches on the bottom, 2 touches on the top, and we're consolidating. So I would wait for the market to fall down here, come up, touch it, bearish candle and sell, or break out higher, come back down, bullish candle and bounce and then buy. That's what I would do. Aussie. This one. Yeah, Aussie's definitely in a box, guys.
So for me, the Aussie is in kind of a nasty box, and it hasn't really broken out yet. So, I mean, the RBA, the Reserve Bank, keeps talking it down like they want it to, that it's going to fall and this and that, but um, they also know that they're going to have to raise interest rates. So, yeah, so it's in this box. I really want to see it, and depending on where you draw the low, it could be here or there, or whatever. But essentially, it needs to break out of the bottom of this box, come back up, touch it, and then I would sell it off a bearish candle there. I don't really think it's going to go up. I think, and this is, I'm going by what the Reserve Bank of Australia says. I reckon the Aussie dollar will hit 70 cents, 79 cents before it hits a dollar. And we're at 93 right now. So that tells you what I think. But again, I still have to wait for the charts to tell me what's actually going to happen. I think that pair is going to be ripe for a really strong move down, just like gold will eventually. All right, let's keep moving. Looney says Bista, DZ Bista. Yeah, so Looney had this touch, and then I was kind of hoping to sell it off the edge of the box here, and it didn't work out, didn't trigger. And now it's looking quite good. I would probably, what I would do with the Looney? I would go to the weekly, and here's why. I would go to the weekly, and I would wait for a weekly candle to close below this low right here. This low was 2 weeks ago, and that was 108.59. I would wait for the weekly candle to close below 108.59, and then I would say, you know what? This is going to go down, and I'm going to sell it all the way down to this low here at 106.30. Or even lower. You could go down to where it bounced down here, where all these lows held, and that's 103 or 103.20 or that area. But I want to see a big red candle print, and I want to see it close below this lowest low here to tell me that this little retracement move here is over. That's how I would trade the Looney. I think the weekly is less noise. And the yen here from Trend Trader, I'm not keen on a lot of these yen pairs. I think that it's gone up quite a bit. I think that it's probably two things could happen here. Two trade scenarios. The most likely trade scenario is that sometime in the next 2 weeks, the yen comes down here and gives us a reason to buy right here, because it's going to bounce right off of where the market was held, comes back down, bounces, prints a bullish candle, and then basically you have a really easy target because you just use whatever the high ends up being here. Wherever this high is, whether it's here or higher or wherever, that becomes your target. Does that make sense? Wait for the market to fade back down here, bounce here, bullish candle, stop loss below the low of the lowest candle down here when it bounces off this level, and it comes up here. Now, the other thing to do on this pair would be to sell it when it reaches this high up here. So either way. That would be more of a weekly trade, I think. But I think the bullish trade is probably more likely. I think the bullish setup is probably more likely to fall into place. All right, any other questions, guys, while we're here? Any other charts? Euro. My euro is, where's my euro? Cable. Okay, cable. I had the cable. There it is. I know it's been going down. I was hoping to get into sell. See where my little yellow box is? That's where I had my sell order set. It never got there for me, and fortunately, I missed out on this leg down that I really wanted to get in on. But now that it's consolidating, I would probably look for it to come back up, and there's a couple of places where I would sell it. I would sell it off of essentially off of this area here around 66.80. That would be the best spot to sell it. The second best spot to sell it would be 67.60. So 66.80 or 67.60, it does get back up there. But the best thing, and it looks like it probably will retrace here, the best way to do it is to go and wait for it to get to this where it bounced right here and where it bounced right here. And that's right around 66.80, 66.90, right around there. And then, of course, where are you going to sell it to? Well, you're going to sell it to wherever it stops. If it happens to stop right here, that would be your first target, and then second target would be down here at 64.70. That's how I'm going to do it. Thanks for the question, Asma. That's a good question. Thank you, Joe. Cool. Thank you, guys. I really appreciate it. Well, I hope you have a wonderful week, trading week, guys. I hope that you have time away from the charts too. Maybe trading the daily charts or weekly charts will allow you to spend time away from your charts and do things that you love doing. Thanks so much for spending time here. I really appreciate it. Thanks, Adinda. And thanks, Trend Trader. See you, Bista. See you, Pan. Take care, DZ. Thank you, Alexandru. Bye, Glenn. See you guys. Have a good one, guys. See you soon. Bye.